Get ready for the easiest explanation of what support lines and support levels are, why they form, and why traders use these as a reference point to make some cheddar. So the support line is an identified price through which a horizontal line can be drawn that can be typically visually seen since the price of the asset has touched it several times but has not passed through it for a given length of time and reversed to the upside. It could be an hour, a day, a month, a year. This all depends on the strategy you are using. The support line is seen to be stronger and more credible the more times that the price has historically been unable to move past it. But there are some patterns that hint that that support line might get broken, and we'll cover those in future videos. So the most basic strategy would be to buy near the support line and then sell near the resistance line, which we'll also cover in a different video. Think of the support line as a floor to the price action. So looking at AMC's one-day chart, we can see that there's certain moments that are obvious that there is a support line where the price reaches it, it tests it, and then it bounces back up. Now it's also important to mention that generally when the price breaks this support line, it will rip through it to the next support line and it will test that support. So why does all of this happen? Well, technically, it's because the downtrend is expected to pause and reverse due to a concentration of demand and buying interest, because buyers are looking to buy at the support levels in hopes that they're getting a great deal, as history suggests that it will move to the upside after coming close to that support level. Traders place market orders, limit orders, and those orders tend to trigger when the price gets closer to the support line, further creating that support line. Why? That's where the psychology comes in. Traders use historical price action to predict future price action. And if enough traders are playing these technical chart games and believe in the noticeable support line, then it becomes a collective, self-fulfilling prophecy. Think of it as just herd mentality. People believe that right here is a support line, so when this comes down, they feel this is a good time to buy because it will reverse to the upside. If we take a look at the 10-day chart, you can actually see that these support lines, they have a bit of memory. People remember this. Technical traders, they pay attention to these. So for instance, this line here, so the $47.15 mark, on this day it really held up well as a support line. And so when it was tested again on June 9th, then people saw this as a past support line and it acted as a support line. The same thing occurred on June 2nd, June 3rd, and June 10th. This $39, $83 mark, it acted as a support. Now keep in mind, some people, they actually draw supports as a range, but we will get into all of that in separate videos. Now there's a lot to keep in mind here. Volume plays a big role. Other technical indicators play a big role. If a support line is broken, like I mentioned, and the price rips through it, it'll typically continue to drop until it hits another support line, or other important technical indicators come into play. If the price reaches the support level and the support price holds, then it will likely reverse back to the upside. So hopefully now, when you hear support level and support line, support price, etc., you will remember what you learned in this video. Speaking of support, please do emotionally support me by hitting the like button, subscribing, and commenting on how much this video revolutionized your love life.